I think this is a case of having your cake and eating it too. For the Democrats, if Biden is elected, it's a way to have the Democratic leadership, but not have the calories of the higher taxes. And that really was a major fear coming in with the blue wave. If you move the corporate tax rate from 21% to 28%, it worked out to about $20 of S&P earnings. So the estimates for next year are $167 a share, thereabouts, for the S&P 500. If we had had that tax increase quickly, to lose $20 of earnings, it would have been hard to offset that even with the much bigger stimulus package. And I think the market is breathing a sigh of relief on the gridlock government. And as you know, Alexis, over the last 100 years, the most bullish scenario for the stock market is a gridlock scenario, regardless of whether you have a Republican president or a Democratic president.
But Tom, could this time be different? We're living in an unprecedented time with this pandemic. Is gridlock really what investors, I mean, they might be hoping for it now, but maybe they should be careful what they hope for, because we do need stimulus to get passed. We are going to need some sort of an infrastructure bill. So in the longer term, is gridlock really going to serve Wall Street well?
Yeah, that's a great question. And I think in a sense, that's the negative of the whole scenario. With a blue sweep, you would have seen a stimulus package between $2 to $3 trillion. I think now, more realistically, you're going to be at $1 to $2 trillion. But if we put that in perspective, you know, the IMF has global growth contracting by negative 4.4% this year, which is about $3.66 trillion. But on a global basis, we've done over $12 trillion of fiscal stimulus and about $7.5 trillion of monetary liquidity. So, you've basically got a $3.6 trillion pothole, and close to $20 trillion of asphalt has been applied. And as we get through this with the vaccine and with some of these things, I think you're going to see the velocity of that money pick up. And even though this package is going to be a bit smaller, I do think you're going to see some really rapid growth. And we're seeing speckles of that in places like China, which is a few months ahead of us in terms of the recovery.
So it sounds like you're talking fundamentals here. And one of those fundamentals, of course, is the labor market. And today we got the ADP report. Investors just completely glossed over that. But if you look at the numbers, they're pretty disappointing. It showed a reading of 365,000. The street was looking for better than 600,000. We get the unemployment report from the government on Friday. Is that just going to be too much of a backward-looking number, or should investors be paying a little more attention to the health of the labor market right now?
Yeah, you bring up a good point, Alexis. It's moving in fits and starts, because I think we're having this kind of rolling waves around the country. We had the Northeast, then we had the Southwest, now we have the Midwest, and then we're having speckles all over the country. And I think as different businesses have to open and close, you're seeing this impact in the labor market as we move into fall and the case count ticks up quite a bit. But I think the four constants coming out of this, and the market is digesting this, is number one, we know we're going to get stimulus, and it's going to be big, whether it's now only $1 trillion or up to $3 trillion, that we don't know, but it's going to be big. We know that we're going to get a vaccine at some point, probably before the end of the year, which we're not focused on the last 48 hours, of course, with everything going on. But, Pfizer's come out expecting emergency approval potentially before the end of the year, and some of the others. So we know that's within months, and we can quantify that. We also know that probably states are going to start to reopen more and more over time as we move forward. That will be very, very positive for GDP. And then finally, as we know in the Fed meeting, we have this unlimited Fed put and backstop accommodative policy, more asset purchases if required through this period of uncertainty. And that's going to take us to new levels.
Another thing getting lost today is the fact that there's a Federal Reserve meeting underway. With the new administration, if it is indeed Biden, do you think that we see a change at the top of the Fed, or does he keep Jay Powell in place?
Yeah, I'll tell you. I mean, Jay Powell really saved our country and the world from a global depression. I think it would probably be foolish to replace him, but every administration likes to put their signature on the policy, and I think you'd potentially see a replacement when that term is up in over a year's time. But generally, I would expect that if former VP Biden is elected, it will be an accommodative Fed chair.